out there comparing Nvidia to a Cisco. You've been in the game long enough. Talk to me about your take on that comparison.
Yeah, so I grew up in the dot-com era. I think I was about 10 years into my career, and there are definitely parallels, right? Cisco was the driver and the builder of the infrastructure for the internet age. And there was overinvestment in this space, and NVIDIA is clearly one of the biggest builders for infrastructure of this generative AI days. And we do need to be very careful and look for what I call the precursors of something that could pull back. Now, first off, I don't see anything changing for 6 to 9 months, but we do need to look at the downstream profitability that people in the ecosystem are making or not making. These are the software companies like Adobe, Salesforce, SAP, and ServiceNow, because if those enterprises and those consumers aren't paying more for those new AI features, then this whole gravy train comes to a screeching halt, like we saw in the internet bust.
And so all these things considered, what is NVIDIA going to need to continue to prove on a sequential basis at this juncture that's going to be critical to cement this broader story that they've been able to sell the markets on?
Yeah, so growth, it's growth, and more growth. And this next generation of NVIDIA growth, the new growth, will be all about the enterprise. 80% of data for companies and businesses is still on site or on the enterprise edge. So what they're doing is they're enabling companies like HPE, Dell Technologies, and Pure Storage and Lenovo to build that out. And this week, I actually personally attended the HPE and the Pure Storage event. This is what it was all about. This is the second layer of this data center build out.
Well, and it's interesting, in your notes to us, you explained that this is a private cloud play. How bullish of a signal is that for the chip sector in general, but specifically here for NVIDIA?
Well, it's very positive. First of all, there's a little bit of a diversification of risk, because if the only enterprise AI plays are in the public clouds, then it's pretty much winner take all. And I view this enterprise play as there's something really here. And then what you do is you have the VMwares that's owned by Broadcom, the Red Hats of the world, IBM software, and even software from HPE that will get a lift and a juice from this infrastructure build out. And here's the thing, that the enterprise data center play is more durable than, let's say, the public cloud play. It's kind of the gift that keeps on giving. So if NVIDIA and its partners can stick this landing, and enterprises can start either leveraging the benefits from enterprise SaaS companies like I talked about, or building their own, then this is going to be a 5 to 10 year run. And maybe we won't see the dot-com bust like we saw decades ago.
As NVIDIA is one of the biggest builders of generative AI infrastructure, which we will discuss in today's video, along with how this may impact NVIDIA stock, first make sure you subscribe to our channel if you want to stay up to date on the most recent news about NVIDIA and the stock market. We post updates on the biggest shifts and catalysts in the market, so click the follow button to ensure you don't miss the most recent updates. Now let's get back to today's video. Because of the fervor behind artificial intelligence, NVIDIA's stock is rising. With a $3.34 trillion valuation in June 2024, NVIDIA momentarily overtook Apple as the most valuable corporation in the world. Ian Buck, Vice President and General Manager of NVIDIA's Hyperscale and HPC division, emphasized the financial advantages of GPU investment during the Bank of America Securities 2024 Global Technology Conference, according to the First Post. He said that NVIDIA's GPUs provide cloud providers with significant returns on investment. Providers can make $5 for every dollar invested in GPUs during a 4-year period. According to Buck, inferencing activities yield even higher profits, roughly $7 for every dollar invested over the same time span. And this number is increasing. with technologies like NVIDIA Inference Microservices and NAMs, which support well-known AI models like Llama, Mistral, and Gemma. NVIDIA is aggressively addressing the growing demand for AI inference. Additionally, the business is emphasizing the Blackwell GPU. Buck underlined the value of early cooperation, pointing out that building data centers requires extensive planning. But first of all, I want to thank you for staying tuned for the full duration. Please click the like button and subscribe to the channel if you enjoyed the video. Making them takes a lot of effort and time. Your help will be very beneficial to our development. Returning to the video now.
Space, Patrick, and it makes me think about the competition of it all. I'm curious if you can talk about the biggest risk to NVIDIA when it comes to pricing power on its chips, and just give us some context on, the pricing of NVIDIA's chips versus some of their competitors.
Yeah, some of the earlier data center chips that NVIDIA had, they might sell for $5,000, $10,000 a piece, but now we're looking at $30,000 to $40,000 per chip, and that is astronomical. It's probably over 1,000% gross margin. But the longevity here, so you've got two levels of competition. First, you have the merchant silicon providers, the AMDs and the Intels of the world. And then you have the homegrown ones from AWS, from Azure, and from Google. And what it is a race right now is NVIDIA is trying to get a lock-in through their software. I do believe that chip makers and AMD in particular have come up and have as competitive or almost as competitive chips for training. 100% there are competitive chips for inference, but it's that software lock-in that's referred to as CUDA or NVIDIA NIMs that NVIDIA is trying to stick. So regardless of who has the better chip, you have to go with NVIDIA because of its software.
Yeah, eventually every dinner table is going to know about Compute Unified Device, whatever the A stands for, but
Right.
applications, something like that. But anyway, at the end of the day, and I'll look that up and give that back to our viewers here.
Yeah.
Architecture, that's what it is. But anyway, all these things considered, Patrick, it's been one of the most overcrowded, or de facto, as Goldman Sachs has called it, AI trades here. So as we think about NVIDIA going forward and the 10-year horizon that you were just looking at, I mean, we're right now in the ballpark of a $3 trillion market cap. What do you think it could get up to?
I don't see any reason it couldn't get up to 4 trillion. And again, a lot of this is based on expectations, because you look at PE, it's pretty astronomical, right? And if we can see some positive signs from the downstream players, because other people have to make money, not just NVIDIA, again, otherwise this comes to a screeching halt. But I don't see any reason why this couldn't get to 4 trillion if we continue to see those positive signs down in the channel, and we keep seeing positive news coming out from NVIDIA with its partners.
Patrick Moorhead, who was the More Insights and Strategy founder, CEO, and chief analyst. Patrick, great to speak with you as always.
Thank you, Brad and Maddie.
NVIDIA, NVDA, saw a plus 1.47% jump from the closing price of the previous day as it concluded the latest trading session at $129.28. The stock outperformed the S&P 500, which had a daily gain of 0.55%. In the meantime, the tech-heavy NASDAQ index increased by 0.63%, and the Dow gained 0.62%. The stock of the company that makes artificial intelligence and gaming graphics chips fell by 1.71% last month, less than the 4.28% rise in the S&P 500 and the 5.73% gain in the computer and technology sector. The financial community will be keeping a careful eye on NVIDIA's performance in its next earnings release. An EPS of $0.63 is expected for the company, which would represent a 133.33% increase over the same quarter last year. In the meantime, net sales are expected to reach $28.24 billion, according to the Zacks consensus estimate for revenue, up 109.04% from the same period last year. For the full fiscal year, Zacks consensus estimates indicate plus 106.15% and plus 92.95%, respectively, changes over the previous year's earnings per share of $2.68 in sales of $117.55 billion. It's also critical to take note of the most recent adjustments made to Nvidia analyst estimates. The most recent short-term business trends, which are subject to regular change, are usually reflected in these updates. In light of this, positive estimate revisions can be interpreted as an indication of hope for the company's future prospects. Our analysis shows that these estimate modifications are directly related to impending stock price performance. What are your thoughts on Nvidia's stock? Is it worth buying at the moment? Please share your opinions with us in the comments below. And don't forget to share your NVIDIA valuation with us.